Hi everyone, and thanks again for downloading and reading our newsletter. It's coming towards the end of the 2024 year. We've had some very interesting global political change in the US with Donald Trump coming back as really the leader of the free world. And I think allied to that is our positive GNU change during the year in South Africa. And I think, it's interesting to see all of these political changes throughout the world, and I think what it makes us more certain of and more focused on is just looking through the noise over the longer term. Property is a very long-term asset class. When we look back at what we've done, certainly since about 2019 in terms of our developments, we've developed nearly 10 billion rand of our own assets, and that's all new boxes, and touch wood, they are all fully tenanted as we sit here today. And how have we funded that? Well, we've sold about 7.5 billion of non-core assets. And I think, it was a very different time in 2019 when we embarked on this process. And fortunately, we looked through the noise. We didn't shut up shop during COVID. We've had some large political change in South Africa and globally. And I think, when you look back now at the position we find ourselves in, it was those little incremental changes that we made which have put us in this really strong position. We released our annual results a couple of months ago, and we were very pleased to see that our like-for-like NOI growth at a portfolio level is just over 8%. And I think that's quite remarkable, because that's what really drives the growth of property, is can we grow the net operating income on a positive and consistent basis above inflation. And I think if we can do that, we'll be able to make total shareholder returns that really are market leading and compensate our shareholders for taking that risk. So I think that's really what we focused on at Fortress, is more total shareholder return. And I think over the long term, when we look at the performance globally of real estate funds, the ones that are specialized seem to do a lot better. So we really are focused on specializing in logistics and specializing in convenience and commuter retail, both here and in Central and Eastern Europe. That's going to stand us in very good stead. At the moment, we've got nearly 20 billion rand in logistics real estate, 15 billion here in South Africa, and almost 5 billion offshore in Eastern Europe. And we also have a big shareholding still in Nepi Rockcastle, which is, strangely enough, the third largest listed European retail real estate company after Unibail and Klépierre. I mean, that's quite an achievement on their part, that this company, really born out of South African capital and based in Bucharest and Warsaw with a headquarter in Amsterdam, is now the third largest European retail real estate business. And I think they really are going from strength to strength, as is our small foray into Eastern European logistics and logistics developments. We have a team in Warsaw that is doing very well. And actually, as we stand here today, that pipeline is marginally bigger than our South African pipeline, which stood at 1 million square meters in 2019. And we've whittled that all the way down to about 160,000 square meters left in the SA pipeline. And we have an option to do about another 150,000 square meters. But that business is really doing very, very well. As we look forward to the next year, to 2025, I think the sector's been buoyed by global sentiment around interest rates and around real estate specifically. Will interest rates come down as quickly as economists are forecasting? I'm not sure. But we certainly are likely to see slightly lower interest rates, which helps our business. It helps us sell the non-core assets. It helps us pay less interest and boost our distributable earnings. But I think the one key thing that we've seen over the past decade or two is that interest rates are not the driver of real estate investments. I think we've been very, very focused on what the real estate fundamentals look like. And if you get that right, the lower interest is just really a bonus. But I think what we saw a decade ago, when interest rates were sitting at around zero, certainly in most of the developed world, is that sometimes people would make that decision because they could borrow cheaply. And I think us at Fortress, we never look at real estate like that. We look at real estate as to what return we can get on an unlevered, ungeared basis. And if that return is good and good over the long term, then it's nice to have the cheaper debt. But we can't do it the other way around, which is if we can borrow cheaply, then we can go and buy whatever we like. Because I think we've seen over the past few years when interest rates rise, how that becomes a very, very difficult, challenging position for real estate owners. So let's see what 2025 holds, but certainly 2024 is a lot rosier than we were round about this time, October, November last year, when real estate stocks and real estate globally was really in a tight position, with a lot of refinancing risk and interest rates that were certainly a lot higher. But I think the next year is going to be a lot better. I think globally real estate seems to be back in vogue, and I think what we've seen is that bricks and mortar still has a role to play, even in the new world, which is driven at the moment a lot by AI and the hype around AI. There's still data centers that has a real estate play. And what's been pleasing, and certainly from a company that owns a lot of retail real estate, is that e-commerce and bricks and mortar need to go together for a lot of these retail businesses to be successful. And I think our strategy of logistics and retail really does play into that e-commerce growth, both here and in Eastern Europe. So we wish you from Fortress all the very best for the year end, a very Merry Christmas and a Happy New Year. And we hope that 2025 is very prosperous for you as a real estate market participant, and hopefully our total shareholder returns will be as good as they have been year to date. Thank you very much.